All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I'm going to do something a little bit different today. I'm going to look at Bitcoin. Now, we don't trade this in the daily live trade room. I'm a futures trader, but I know that some of you do trade Bitcoin. And in doing that, listen, I'm just trying to diversify what we look at here, simply so that you recognize the skill set that I employ, you could apply to any chart that you desire to trade. Now, I day trade on a 3-minute chart. That's my personal preference. I qualify my trade timing or direction on a 15-minute chart. And then I'm looking for low risk entries, right? What's a low risk entry? A little bit of risk, much more reward. So let me show it to you right here on Bitcoin. I'm going to move this screen around because I'm going to have to show you also the technique that I call looking left, because the story will always be told by looking left, right? Prior price action tells the story. Future price action, if you're willing to look at it. If you're not willing to look at it and you put the blinders on, then you're only going to get what you get. But you can make more educated decisions by looking left than you could ever imagine. So you can see Bitcoin here pretty sideways. I'll dial it out, right? Got an old rally here, the prior day, we go pretty sideways, or earlier that morning, I'm sorry. So market pushes up, we go sideways, get kind of crappy, and then we get into the afternoon here. What I personally like to do is I like to partake in an established trend, right? You have to get comfortable into buying into new highs or selling into new lows in doing that, in most cases, right? In order to catch the rally, you have to be part of the rally. You can be a pullback trader, that's fine, but you have to have a technique for that. I am a volume price action trader, right? Volume and price action is identified when the market is under momentum. I am looking for very, very specific components to come into play. Obviously, we're looking at price action here. There's a whole lot more to it, but we're not going to dive into all those details. So let's just take a quick peek. We have a 15-minute bias to the upside. We have a short-term bias to the upside. We're above both of our VWAPs, and we're going to respect our daily and weekly pivots identified by these orange and blue lines. So I'm looking at this price action right here. You go, oh, it's rallying. I'm missing the rally. No, you're not, right? Let it prove itself. There's a prior high here that the sellers rejected the buyers. I now need to see this prior high become new support. Old resistance should become new support if broken and stayed above. And that's what we're going to look at, okay? I am going to do the most basic price action interpretation for you. Here is a close above that prior high. I'm going to look to the candle that retests the prior high right here, okay? I'm going to draw a line. That is now my new support line. If price violates that line and settles below it, there's a better than not chance that we have lost our momentum, right? Now, I can look at this a couple different ways. The most simplistic way is to just clone the price and hover right around those couple bars that go sideways. Notice, we respect resistance here. We respect support here. Right on this tiny, tiny little candle, boop, the buyers pop out. Right in this line, we check all the boxes. Once the boxes are checked, guys, price should never go against your support area. And if it does, either you did this wrong or the market's going to choose not to cooperate. So at the close of that candle, I'm interested in getting long. At the low of this candle, I'm going to move my fat head again. Hang on one second. I'm interested in placing my stop. Okay? So, risking 95 ticks. My first target is going to be here at this daily pivot. Right? So I am looking to take profit at 212 ticks. A risk reward of 2.23 to 1. When price action hits this daily pivot, I am going to sell part of my position. And I'm going to advance my stop to my entry. Because at this point, I'm not interested in giving anything back. I took a calculated risk with a calculated reward, more than 2 to 1. And this may be different for your trade plan. It may be 1 to 1, 3 to 1, 5 to 1. I don't know what your trade plan is. All right. It's none of my business, in all honesty. I'm trying to help you understand price action. Take profit. Move your stop to break even. You approach now the next daily pivot at 602 ticks, a 6.34 to 1 risk reward. Take more profit. You approach the weekly pivot slightly above, 631 ticks, 6.64 to 1 risk reward. Now, I want you to notice something. We don't have any more targets, right? So what are we going to do? We're going to look left and go, what has previously served as some form of support or resistance? And that's right there at 47,276. So I'm going to now look to take more profit at 47,276. Let's call it 276. There you go. All right? Watch that. Oh, look at where price action stopped. Simply by looking left, you could have captured 19 to 1 risk reward ratio. 1,812 ticks, as long as you have the discipline to let your trade run. Okay? Every time you encounter new resistance, you're going to get pushback. You have to put your big panties on and say, okay, my stop's at break even. If the trade's going to go, it's going to go. If it's not going to go, it's not going to go. And I can accept that, right? We have to take big wins, because when we take small losses, we must offset them significantly. And how did I know to take more profit here? Just look left, right, guys? This is simple. Daily, weekly pivots, nothing fancy. This is not high-tech analysis. But all you have to do is pay yourself, protect yourself. Pay yourself more. Pay yourself more. Every time you have a reason to pay yourself more, keep liquidating more of your trade. As long as your stop's at break even, there should be zero stress, because you're never going to capture 19 to 1 risk reward ratios if you take your profit as soon as you get up your $200 or $300 for the day, right? Because tomorrow you may be down $200 or $300 or $500 or $600, and now you're in the hole $400. You can't trade like that, guys. It doesn't work. It doesn't work. Trust me, I have traded in every fashion possible. Okay? I've tried them all. 13 years. I know what works. This works. You must partake in trending markets. If you don't have tools or understand tools how to identify trending markets, then go follow somebody or learn from somebody who does. Okay? The name of my company is Special Analysis, not Special Sales, right? I don't give a crap if you buy something from me or not. I'm here to analyze the market and interpret it for you so you have a greater understanding of when, where, and why to partake in the market, but most importantly, when, where, and why not to partake in the market. Because as traders, we should more often be sitting on our hands waiting than trying to diddle the market, right? Diddlers lose money. Traders make money. There's a reason that there's a statistic that over 90% of traders fail, because they're over trading. They're not waiting for exactly what they want. Guys, if I don't get exactly what I want, I'm not entering the market. I'll go days, I'll go weeks, I'll go months without placing a trade. Because when I get what I want, more often than not, it rewards me greatly. So you have to decide what it is you want to do and what you want to learn. Are you going to buy the next sales pitch, or are you actually going to learn how to read and interpret price action and volume so that you can identify and execute opportunities like this on any chart, on any time frame? At the end of the day, that choice is yours to make. There's links below this video. Feel free to consume the content. Feel free to send me an email. I'd be happy to speak with you. If you'd like to trade live with me, I will teach you this. You will see it every day. There's a reason I give my clients 60 hours a month. I will see you in the next video. God bless.